with Saurabh Mukherjee as well just earlier today about where he foresees an earnings revival come by and whether the government's agenda of propping up consumption is actually going to spell out and reflect in the numbers or not.
Q3, the quarter to December, it's already looking fairly perked up. So whether it is consumer durables, whether it is auto, whether it is FMCG, October clearly was spectacular. I think November is turning out to be a little bit more moderated, but my reading is the quarter to December will be the best quarter for earnings growth for the Nifty in nearly 2.5 years. So the quarter to September Nifty earnings grew at a pretty weak 1%. My reading is the quarter to December Nifty earnings will approach the sort of magical 10% mark. And I think that's as good as you can expect from policymakers in one quarter. The big test, I think, will be 2026, right? So it's good to hear the RBI governor indicating further rate cuts ahead. I think another 100 bips of rate cuts is required to give relief to the middle class in what is clearly a very tricky situation of the middle class. Lots of debt, a tight job market. And then hopefully in the budget, we'll see more tax cuts, direct tax cuts aimed at the middle class. And I think that's how we can get this economy back on track by giving the middle class relief, both through interest rate cuts and by tax cuts. Order earnings picture slightly better. So for the quarter to September, BSE 500, NSE 500 earnings growth, I think, was around the 10% mark. And if consumption picks up further through 2026, even the broader earnings picture should improve. What I found remarkable was how moderated, how sober Nifty EPS growth had been for 2.5 years. And that's why the 1% figure for the quarter to September, I think that's going to improve sharply for the quarter to December. But yes, even in the broader market, given that consumption is the majority of our economy, if consumption improves, there'll be cheer all around on the earnings picture for the whole market. And we are seeing very encouraging policy action, which suggests that the government is seized of the gravity of the situation and is making the necessary fiscal adjustments. In parallel, the RBI seems to be making the necessary monetary adjustments to get consumption back on track. And if we get consumption back on track as a nation next year, I think Trent will be a big beneficiary of that, because in that space, value apparel space, it's clearly head and shoulders above the competition. So we've had Trent for many years. In fact, as the stocks come off, we've nudged up our position a little bit. We've had Asian Paints for many years. The stock came off and people got resolutely negative on Asian Paints. We were absolutely delighted to jack up our position. But leaving those aside, in South India, we've bought Vijaya Diagnostics. We've increased our position in Vijaya Diagnostics quite meaningfully over the last year. Narayana Health, another healthcare business in South India, we increased the stake in that over the last 12 months. In our small and mid-cap fund, we bought Eris Life Sciences roughly a year ago. I think those are the names off the top of my head: NH and Narayana Health, Vijaya Diagnostics, Eris. And you can see the healthcare theme, right? The reason we like healthcare is I think Ayushman Bharat is a very effective scheme. And the government of India is reasonably clearly communicated over the last 2-3 years that the government itself will not provide healthcare. They will provide health insurance. And Ayushman Bharat for low-income people plus Medicare for people like us means that there will be demand for healthcare, hospitals, diagnostics, medicines. And we think we can make money from that.
Okay, that's Saurabh Mukherjee talking about quite a few ideas.